If you're a beginner investor, at some point you'll probably ask yourself two big questions. First, apart from index funds, should I invest directly into specific stocks? Second, which stock should I actually invest in? In this video, I want to give you a practical and balanced framework to think about both questions so you can make decisions with more clarity and confidence. Let's start with the first one. Apart from index funds, should you invest in individual stocks? Index funds, especially those tracking the S&P 500, are powerful because they give you instant diversification. When you buy an S&P 500 index fund, you're indirectly owning companies like Apple, Microsoft, Amazon, and hundreds of other large U.S. companies in one single purchase. That reduces company-specific risk and makes your portfolio more stable. But does that mean you should never buy individual stocks? Not necessarily. If you have the time and genuine interest to research companies, read financial statements, follow earnings calls, and think independently, then investing in specific stocks can be a great learning journey. It forces you to understand how businesses actually make money, how valuation works, and how market psychology plays a role in price movements. However, there are two important conditions. First, start with a limited budget for individual stocks. Think of it as your learning capital. For example, maybe 70 to 90% of your portfolio stays in diversified index funds, and 10 to 30% goes into carefully selected individual stocks. This way, even if you make mistakes, which everyone does in the beginning, your overall financial foundation remains solid. Second, always have a clear reason before you buy a stock. When you buy a company, you should be able to explain in one or two sentences why you believe it's a good investment. For example, you might say, I believe this company is worth $100 per share based on its earnings growth and cash flow, but the market is currently pricing it at $75. That gap gives me a margin of safety. If you cannot clearly articulate why it is undervalued or why it has long-term growth potential, then you are probably speculating rather than investing. Also, have a game plan before you enter the position. Ask yourself, how long am I planning to hold this stock? Is this a long-term compounder I want to own for 5 to 10 years? Or is this a shorter-term opportunity based on temporary mispricing? And just as important, under what conditions will I sell? Will you sell if the business fundamentals deteriorate? If the stock reaches your estimated intrinsic value? Or if a better opportunity comes along? Having a predefined exit strategy helps you avoid emotional decisions when prices swing up or down. Now, let's move to the second big question. Which stock should you invest in? The honest answer is, it depends. It depends on your financial situation, your investment horizon, and most importantly, your risk tolerance. If you're just starting out, one reasonable approach is to begin with large-cap companies. Large-cap stocks are typically more established, have diversified revenue streams, stronger balance sheets, and more predictable earnings. Many of them are the top holdings in the S&P 500. For example, companies like Alphabet Incorporated, Johnson & Johnson, or NVIDIA are well-known global businesses with significant market presence. That doesn't mean they are always good buys at any price, but they are generally more stable than smaller and proven companies. As you gain more experience and become more comfortable analyzing financial statements and understanding business models, you might gradually explore mid-cap or small-cap stocks. Mid-cap companies often offer a balance between stability and growth. They are past the early survival stage, but still have room to expand. Small-cap stocks, on the other hand, can offer higher growth potential, but they also come with higher volatility and higher risk. Prices can move dramatically based on earnings results, news events, or changes in market sentiment. So the key question is not just which stock, but which stock fits my risk tolerance and my portfolio structure? If you are someone who loses sleep over market fluctuations, concentrating heavily in small cap or highly volatile stocks may not be suitable for you. On the other hand, if you have a long time horizon and can tolerate significant price swings, you may choose to allocate a small portion of your portfolio to higher growth names. Another helpful principle is to avoid going all in on a single idea, especially as a beginner. Even if you feel very confident about a company, unexpected events can happen. Regulatory changes, management issues, technological disruption, or macroeconomic shocks. Diversification is not about eliminating risk completely. It's about managing risk so that one mistake does not permanently damage your financial future. To summarize, yes, you can invest in individual stocks if you have the time and interest to do proper research. Start with a limited budget. Always have a clear investment thesis and define your holding period and exit strategy in advance. And when choosing which stocks to invest in, begin with companies that match your risk tolerance. Large cap names can be a more stable starting point. And as your skills and confidence grow, you can gradually explore mid-cap and small-cap opportunities. Investing is a long-term journey. You don't need to know everything on day one. Focus on building knowledge step by step. Protect your downside and let experience compound over time. If you found this video helpful, please like and subscribe to the channel. It really helps support the content and allows me to create more videos answering common investing questions. Thank you so much for watching, and I'll see you in the next video.